Let's start by taking a look at it. So silver, silver had to move back to the upside here. What was the impetus? If you go to the hourly chart here, the market found some support against the 100 and 200 bar moving average. This is a non-trending type range during this period here. The market moved below 100, moved lower. Should have gone lower here, but did not. Found support against this 134.20 level, and then moved up, moved a little bit above the 200. But at this point, the market's in a non-trending type range, moving above and below 100 two moving average. It wasn't until the two moving averages converged when the market started to find support against the 100 bar moving average and moved up. Now, where did we go? We went right up to this point right here. This point corresponded with the high that went up to on May 13th. This would be our next target level on the top side, also on the daily chart. It also happened to represent the 38.2% retracement of the move all the way up from the low, going all the way back to January or February of 2010. That's a long way. If I zoom out here, the last time the market was below the 200-hour moving or 200-day moving average, as a matter of fact. And so that move, the market seems to be in between the 50% and that 38.2% with the 100-day moving average in between. That 100-day moving average is going to be a level that we're going to have to pay attention to on the downside. 135.07 off the hourly chart. I put a line in there at 135.07 just to remind us where it's at, and we'll run into the 100-hour moving average before we get down to that level. Other levels of support come in at 135.71. That represents this high right here. So we got this high right here, this high right here. Market breaks above this high right here. We should go higher. That's what it did, but we did find resistance. Break below the 71 level. Could head on down toward the 100-hour moving average and the 35.07 level. Let's take a look at the euro versus US dollar on the daily chart to start off with. We tested the 100-day moving average yesterday, and today we found support against that level, or pretty well above that level. The market low only came down to around 140.33, 140.01. 140.01, we'll call it 140 level. The market found support against that level and moved higher. Now on the move to the upside, we did break above the 141.12 level. That was a key level. Also 141.21 was a key level as well. It corresponds to this low right here and this low right here. The market pushed above that level, moving to a high of 141.32, but the if should rule said that if the market moves above this key resistance level, we should go higher up toward the 141.56 level. It didn't. The market started its move back to the downside off the 5-minute chart. We are now back up below the 100 bar moving average here, trying to stay below that 100 bar moving average. Is starting to move more flat here. We had a nice little trend, nice little channel going here, nice little support against the 100 bar moving average. Now that that support is in question, let's put a Fibonacci from today's low up to the high price and measure our retracement levels. And the good news is that the 38.2% retracement seems to have held the low. In fact, the market went right down to that target level and found some support. So we're in between support and resistance now here on an intraday basis in the euro versus US dollar. If you're bullish, it's a good level to buy against. If you're bearish, a good level to sell against would be around this 100 bar moving average. While you stay below the trend line, stay below the 100 bar moving average, you want to see the market move below the 38.2% at that point, and then get below the 100 bar moving average. So the choice is yours right now. What I can say here is that the move above the 23 level failed, and the market then got disappointed, came down to a nice support level where the traders are entering the market maybe more neutral than it is anything at the moment. The sterling versus US dollar on the hourly chart, in between our goalposts here. Our goalposts is defined by the 100 and the 200-hour moving average. In this case, we went a little bit above the 200-hour moving average, moved up to 61.8, and then fell back down. The market is in between these two moving averages now. That's what I call the goalpost. And the trade is, if the market moves below, we should see it move that way. If the market moves above, should go that way. So that's the trading. We're right in between those two levels, a little bit toward the low side. So you can define your risk. If you're interested in buying, buy against that trend line. Look for a move to the upside. Dollar versus yen. Yen, this currency pair again. The 100-day moving average is coming into play once again. The 100-day moving average came into play last week. It's coming into play this week. That 100-day moving average currently comes in at 82.24. Currently trading at 13. The high for the day came in at 82.20. So we're finding some sellers against that 24 level, which you'd expect. The Today the market did find some support against the 100-hour moving average trend line here as well. So good support down there, good resistance up here at this 24 level. Also corresponds, by the way, with the high from last week as well. So not only do we have the 100-day moving average, but we have the high from last week providing the resistance. Let's see how our dollar versus Swiss is working. We saw the move to the upside yesterday, breaking above the channel, move back below the channel here, move to 100, move below the 100, and seems to have found a bottom here. The bottom probably against these lows right here. We had a low here, but market moved higher. Had a low here, the market moved higher. Had a low here, market moved higher. Had a low here, market moved higher, and then broke, and then moved higher there. Had a low here, market moved higher. Moved above the level here, market moved higher. Now we're finding support against that level. So clearly 87.82 is a key level for the dollar versus Swiss, the level that you can lean against in order to get this market more bullish. We need to get back above the 100, above the trend line, and above the 200-hour moving average. Get above all three of those levels, things are looking a little bit better for the dollar versus Swiss. Dollar versus Canada, non-trending type day here today. Market's moving largely up and down in a very choppy fashion. 100 and 200 bar moving average converge. You really don't want to pay attention to this 5-minute chart at the moment. What you can focus on here is the 100-day moving average. That 100-day moving average comes in at 97.60, and the 38.2 comes in at 66. If we go to the hourly chart and we put in a horizontal line at the 60 level, right about there. For most parts in the New York session, the market held above that 60 level, and so that's given the market a little bit more of a positive bias here, although no momentum to the upside here. Be patient with it. If the market should break below that 60 level, be thinking that we're not going to get this little move to the downside. We're going to see more of a concerted effort to get down to the 97.26 level, which is the 100-hour moving average. Stay above the 60 level, however, and everything still remains fairly supported for the currency pair. Finally, the Aussie versus US dollar staying above the 38.2% retracement at 105.11 is going to be our challenge for any sort of bulls here today. The move to the upside moved above the 38.2. As you can see, each of the time the market's been above that 38.2, kind of moved right back down toward that 38.2 at 105.66. Let's watch 105.66 on the top side, 105.11 on the downside. If you're short here, you can be a little bit more confident that the market has a potential to move to the downside. If you're long here and confident of the move to the upside, your stop may be all the way down to the 11 level, or you may want to use an interim position, maybe somewhere in between here that dissects the highs here and the low here, and the low here. That would make sense to me from a trading perspective. See you this afternoon at our webinar. Again, that's going to take place